Hi, everybody. Welcome back to Ox Talks. It is Wednesday, May 22nd, 2024. Doing a quick turnaround video here today. I was in depositions this morning for about 3.5 hours and just wanted to take a break from daily routine here, share a few stories with all of you. We did have some crucial data points come out today, some earnings reports I think are, a gauge, continue to bellwether in terms of what's happening in this economy. I wanted to start off the show by giving a shout out to a loyal subscriber and follower of the channel named Carol. She just sent me a message not too long ago saying that she missed when I'm not reporting. It really was heartfelt. I appreciated getting that message midday today. I want to say hi to Carol and thank her for watching the shows. And she's one of these people. She comments in a lot of the videos. And she's also shared in the comments some personal stuff she's gone through health-wise and such. But you know what? The takeaway I always get is she always has a positive attitude. She always has something gracious to say, not just to me, but to the community here. And I like that. And there's a takeaway there. The takeaway there is that we all, in the face of a lot of tough economic times for many, and tough political times, geopolitical times, and with this presidential situation unfolding later in the year, it's important that we try to the best that we can to keep a positive attitude. Keep getting up every day, put one foot in front of the other, find motivation from within your family, your loved ones, your animals, people depend upon you, your employees, brothers, sisters, aunts, uncles, parents. It's easy to lose, let's say, sight of that. And when we get caught up in the daily routine and the stress that everybody is dealing with right now, a lot of financial stress and a lot of stuff, pinging us from all different directions. So everyone stay positive. We do share news on this channel, and you get on other channels that is not, necessarily uplifting. It's not sugar-coated. That's not the idea. It's to give you guys information as it's being released, and to definitely not spin it so that people can understand what's really happening. So yes, this stuff tends to weigh heavily on all of us. And trust me, when I'm reading it and going through it, it weighs as heavily on me as I'm sure it does on you when you hear it coming from my mouth and others, JB and others that also have channels that are covering these perspectives. Thank you for all being here. Thanks for watching. And please obviously share the videos with as many people as you can. I appreciate you subscribing if you're not subscribed. So let me jump into some stories today that I thought were important. The first one we'll talk about, because it's on everyone's mind, is inflation and what's happening, what's going on with the Federal Reserve, what is the game plan as this year continues to unfold and look really, really ugly from an inflation standpoint. And we know, talk about almost every day on the show, or almost every show, that the costs don't seem to be coming down. We're paying more for the gasoline at the pump. We're paying more for food. I'm seeing a lot of comments from you, all of you, about how you're having to be so much more selective now when you go into the grocery store, and you're having to be selective on things that you're purchasing, whatever it is, across the spectrum. And that affects all of us. And what that does, and you'll hear about the release from the Target earnings report came out today. And there's a slowdown, and that's because the consumers are slowing down. The consumers are, if they're not tapped out, they're very, very concerned about how many times, and I saw a comment this morning from somebody who said, how many times can we keep tapping into our savings to cover the shortfall? And, that's true. I mean, for those of you that have savings, you're far ahead of most people that don't have $300 or $400 in an account to cover an emergency. And so, those of you that are fortunate to have that situation but are having to tap into it, it's frustrating. It really is, because you feel like you're taking one step forward and two steps back. So let me jump into, this is from CNBC. All I'm going to do is read the headline of the article and the 3 bullet points because it's all I needed to hear. I don't need to hear or read all the specifics behind it. I got the point, and here's the delivery. Federal Reserve minutes indicate worries over lack of progress on inflation. By the way, the stock markets did not like this today. It sold off. It came back a little bit towards the end of the day, but this is going against the narrative being put out there by the mainstream that the Federal Reserve is about to pivot and about to start lowering interest rates. It says, participants observed that while inflation had eased over the past year, in recent months, there had been a lack of further progress toward the committee's 2% objective, the summary stated. Next bullet point. The minutes also showed various participants mentioned a willingness to tighten policy further should risks of inflation materialize in a way that such an action becomes appropriate. Tighten policy obviously means to raise interest rates. And the third bullet point, the meeting followed a slew of readings that showed inflation was more stubborn than officials had expected to start 2024. So that is a very short bullet point list of the takeaway from the Fed minutes that came out earlier today. On the heels of that, at a Yahoo Finance, you have Goldman Sachs CEO comes out and says the Fed is unlikely to cut rates this year. This was just a couple hours ago. Again, Yahoo Finance. It says Goldman Sachs CEO David Solomon said on Wednesday he does not expect the Federal Reserve to cut interest rates this year. Quote, I'm still at 0 cuts, Solomon said at a Boston College event. I think we're set up for stickier inflation. Says Solomon's comments stand in contrast to market expectations for at least 1 rate cut by the Fed this year. Wasn't it just a few weeks ago or a month, 2 months ago where they were saying 3, 4, 5 rate cuts this year? Boy, how the expectations have changed. Yet you haven't, yet's the key word, seen a substantial market sell-off. But that could be on the way. I'm going to share another article with you next that one Wall Street guy thinks, or a company's CIO thinks that it's going to be happening. Solomon's comments, I covered that. Traders reduced bets on Wednesday for more than 1 rate cut this year after the release of minutes of the Federal Reserve April 30th to May 1st policy meeting showed the rate setters thought inflation could take longer to ease than previously thought, and we just shared with you what the minutes said, and that's exactly what is happening. That's exactly what the mindset is now at the Federal Reserve. Inflation is not just nominal, according to Solomon. He says it's cumulative, citing a conversation he had recently with the CEO of a grocery chain who has seen customers cutting back on the size of purchases in response to rising prices. We're starting to see the average American slowing down and changing his habits, Solomon added. I share with you the comment I received this morning from a viewer relative to when she goes into the grocery store, how she's having to change habits so substantially and really only buy things that are absolutely necessary now. So feel free to comment below, if how you are changing or being forced to change your habits for things that we didn't even think about before. Maybe you go in and get a couple extra gallons of milk or a couple extra cartons of eggs or whatever it is. And as these, some extra meat for the freezer, but now as these prices are skyrocketing, how's that impacting you? Here's another article from Markets Insider. And this talks about stock market and where this thing is heading and what is the sentiment. So this is a Market Insider today. Stocks are going nowhere for the next decade as inflation sticks around and U.S. debt balloons, CIO says. Says the stock market is headed for a stretch of dismal returns for at least the next 10 years, according to one ultra-bearish CIO. This guy's name is Bill Smead. He's the investing chief of Smead Capital Management. And he says he's been warning about the path ahead for stocks for a while now. That's because inflation will stick around, hammering S&P 500 returns for years, he warned in a recent letter to his clients. He says, we assume the S&P 500 index is going nowhere for 10 to 15 years. And inflation is here to stay. In a previous note, Smead compared the current macro environment to the 1970s, when soaring inflation and elevated interest rates led to a dead ball period for stocks. A new inflationary era, he says, could produce similar dead zone, he wrote, resulting in double-digit stock losses on par with the dot-com crash and the great financial crisis. He says inflation could also get worse in coming years as prices are being stoked partly because of large public debt levels. Smead said the federal debt stands at around $34.5 trillion. We've covered that on many shows on this channel about the federal debt levels and how lawmakers are sounding the alarm. Top bankers, Jamie Dimons, the Solomons, they're all sounding the alarm in the amount of public debt. And that is inflationary. So I thought that was an interesting comment to tie in the public debt level into the inflation discussion. It says, we've run massive fiscal deficits. He's saying, this is Smead. We've run massive fiscal deficits for years. And there are three ways to balance the budget. You can cut the budget, you can raise taxes, or inflate your way out by paying it back in devalued American dollars, he said. He says the latter, adding the first two options were unlikely due to political constraints, meaning raising taxes is politically very unpopular for politicians that only care about getting reelected. And of course, cut the budget, that never seems to be able to happen with United States lawmakers. So there's, in a nutshell, your current status of inflation, the mindset of the Federal Reserve, the group that will set and does set the interest rates. We know what the reaction was in the stock market today. And, I still have a lot of friends out there that this is all they cared about today was what is NVIDIA going to be reporting at after the bell, how were their earnings going to be, how much was their stock going to go up. I've already seen the text messages being exchanged. There's 10-for-1 stock split at NVIDIA. You know what? I couldn't care less about that. That has zero impact on all of us that are working 9 to 5 or even greater, longer hours, obviously to pay bills, raise a family, pay out for the insurance, pay all the costs we have to pay. Who really cares? Again, I'm not trying to offend anybody, but what NVIDIA is doing or not doing, or how high their stock is going. Now, I did check a little while ago. It was up a little bit. Zero Hedge. Last article I'll share with you today. I'm running a little bit, not too long, 13 and a half minutes. This talks about Target. Target came out with their earnings report this morning. And it says Target shares tumble after retailer reports caution about weak consumer. So again, we just continue to come full circle to the weak consumer. Target shares slumped in pre-market trading in New York after the retailer's comparable sales missed Wall Street's consensus estimates for the quarter that ended May the 4th. This comes as Goldman's analysts have warned about faltering low-income consumers. And look, there's no doubt that inflation, higher prices, higher costs affect the lower income consumers more. But those are the same people that are busting to work several jobs to keep feeding their families, to pay their rent, to pay their mortgage. This is comparable sales. Those from stores of digital channels operating for at least 12 months declined 3.7% in the quarter and were mostly in line with what analysts tracked by Bloomberg estimated. This was the fourth consecutive quarter, it says, of declines. Fourth consecutive quarter of declines in Target sales. Sales were down 3.2%, and customer transactions, it says in this breakdown, were down 1.9%. So less customers, less transactions, and smaller ticket prices. Target Chief Chief Executive Brian Cornell told reporters that high prices are hurting the wallets of customers. We remain cautious, he says, in our near-term growth outlook, which means that they don't believe this is going to turn around anytime soon. So he says discretionary spending would be under pressure in the coming months. Adding demand for appliances and home products languishes. So there is, and Target shares were down 8% in pre-market trading. I checked a while ago, and they closed down 8%. It says here, if pre-market losses hold into the closed session later today, then this would be the largest daily decline in 2 years. Well, it did hold. The stock closed down right about 8% today. So again, you have multi-quarter declines in sales, and you have a stock price, the largest daily decline in over 2 years. So that is what's happening. I'll be getting a workout here in about an hour. Hope all of you will do the same. Please take your physical fitness seriously. Watch the diet, get some strength training in, get those steps in, get out of the chair and move around. Do what you have to do to keep healthy. You need it for stress reduction and management, and you need it for overall longevity. We need healthy, strong people to continue to carry the torch as we fight through this brutal economy right now. Appreciate all of you. We're running about 16 minutes. Thank you for being here. Have a great afternoon and evening. Bye.